Here is a video I did talking about how I started stock market investing, sharing with the world my thoughts, what I was doing and trying to do. This was coming from a place of little knowledge, my journey starting out into the unknown of what I thought you did to build your wealth. With financial pressure of a mortgage and family, along with that bills and living expenses, I could only barely invest $100 a week. Not much in the grand scheme of things, however, I knew from the books and the videos I'd watched here on YouTube, this would grow if I continued to stick at it. That $3,600 was everything I had, all my savings hoping to grow into something meaningful. And here you can see I was actually 7% down. I wasn't saying anything in the video, however, I was pretty unsure about the whole investing thing and worried that this would all be a scam and I would lose all my money. Hello everybody, Gifford here and welcome to another stock market video. Today we're going to go over my total stock marketing investing portfolio. So that earlier video I just shared with you was from 2020. This is when I really started to do my stock market investing into platforms such as InvestNow and then moving on to Sharesies and Hatch later on. And very quickly, just because YouTube doesn't pay me, please hit that like button as a form of payment. That would really help me out, and let's get on with the video. So the agenda is full multi-portfolio breakdown. It's going to have KiwiSaver, Sharesies, my interactive brokers options investing, InvestNow, my Hatch stake and Binance investing, and then at the end you're going to get a summary. So you can see there that I do multi forms of investing just as learning, and also I'm trying to hone my skills in that. So the first slide here is the breakdown as of the 19th of the 1st 2025, and in this breakdown we can see the various platforms in here. So I'm going to be sharing my interactive brokers, which is at 20,000, and this is all New Zealand dollars. My Sharesies Dividend account, which is just under 20,000 at 19,900. My Hatch account, which has $7,500 in it. My InvestNow, which has $5,000 in it. The big one is my KiwiSaver, which we have here in New Zealand. That's got $65,000 in it. And then we have my private portfolio, which has $25,000 in it. And the little one is just a stake platform and also crypto, and that adds up to $1,500. All in all, that gives me a total of $144,100. And as you can see there from 2020, this all started out with that $3,000. So in my KiwiSaver, currently with Milford Aggressive Fund, I've linked it up with Sharesies, so this is where you're seeing that screenshot from, and it's more convenient just for me to have it in one platform. I've been in it for over 7 months and it's given a very good simple return of 8%. So bear in mind that $66,743 in there at the moment with its 8%. It does have a higher fee, so it's 1.15%, which roughly when I last calculated for about $60,000, I'm paying $690 a year. So that's pretty expensive because the other funds are much cheaper. Although what you're getting with Milford Aggressive is that you are chasing higher returns, so it's a lot more risky. So with this high risk investing, it has a 12-year horizon on it. And you can see when I switch, because that's the aggressive fund there, and that was previously before with Smart Shares Growth. And just a side note there of the fee, and that in my 1 year that I was in it, it gave me a 9% return. So I'm pretty much almost there with aggressive with the way the market is going. So the next big one is my Sharesies Dividend portfolio. I document a lot of this in my channel. So right now it's got $19,923 and it's got a simple return of 18.5%. We can see the amount of money I put in, 16,000, and the total return is 3,000. These two numbers don't always add up. That's because it has some calculations. The fees are all in there. A roundabout number there that just gives you an indication of what you've really got. Now, one of the things I did note here is that when I started this portfolio at 2023, the goal was just to have $3 of dividends, because it does take a lot of money to actually get some decent dividends out of here, and I managed to do that. So basically what I'm saying here is that I get my plan paid for, so I'm investing for free. I don't have to pay any fees on top, and that's what I wanted to do that year, so that goal was done. In 2024, last year, the goal was having my dividend payments pay for some leisure stuff. So in this case, it's KFC, so paying KFC $20 a month, and that was good. I achieved that. So now it's only $20, right? So it's only a meal for me. But that's quite good where you're having your dividends pay for a bit of your lifestyle. And it's a little bit gimmicky, but that's okay because you really need some motivation to actually get into investing and do this, because it is quite difficult just kind of putting your money away and not really getting anything back for it. So just a tip to watch out for the simple return number. Sharesies is a basic broker and it does not give you the annualized return. And historically, you should really aim for the S&P 500, which returns 8% per year as the benchmark. In my opinion, a lot of brokers do this. They don't give you the annualized return. The annualized return is what you've actually been getting year on year on year, and it combines all those 5 years or whatever the period is, and it gives you a return, sort of average return for that year, to see if you're actually making, if you're actually investing well. It's no good having 20% one year and then going negative 20% in your brokerage, because the simple return is going to give you a positive number, but the annual return is just going to give you nothing, right? It means you made no money. All you've done is put your investing money in there and wasted 2 years. So in my opinion, this is deceiving, but it's just something to watch out for. This is just what they do because it makes their numbers look good. In my personal opinion, a lot of brokers do that, if not all of them. So on the right side of the table here is just how I structure my dividend investing. I go more about this into other videos, but just for this one, this just shows you the weights in it. To make it easy, I put the amount I invested in, and here are the ticker symbols, and here is the targets here. So the red is that I'm under that target, and in the green, I'm obviously over it. So I try to aim for this. It's never going to be 100%, but it just gives me a benchmark of what to aim for. Dividend portfolio investing is something I'm still not convinced about, especially as I think it underperforms the general market, as in just buying something like a Vanguard VT Total World Fund or the USF, which is the S&P 500. But apart from the KFC, I really don't need that money income anymore, as I am on top of my living expenses. So it has its place. So it's quite a defensive play. However, I've still got a lot of investing years ahead of me, and I know the market will outperform this dividend investing strategy because dividends is sort of an income generating strategy. So we're just going to see how this year goes, and as my portfolio starts to grow, I will have to change some strategies up. But for the moment, this is what it is now. So next up is my Interactive Brokers trading account. Options is unique that you can create income from shares in a losing position. This is what I like because, right, these stocks are risky that I go into, and I'm not a very good stock picker. So in this one here, it gives me a bit of cover. And also the thing I like about this is because when it does go negative, I can generate money from the shares I already own. So a particular example is that I run the wheel strategy on a stock called MPW, where I'm selling calls on the stock that I own. And if those calls get assigned, I then sell puts to get the stock back, and while doing that, I generate an income. This is very risky, and you do need to understand options trading in general along with the market. So you need to make sure that you do like watching the markets. You also know a bit of chart analysis to determine momentum of the stock. Right, so going over the slide, my target per year, whether I get it or not, is actually 20% per year, and that's about, currently with this portfolio size, is $54 weekly or $90 to $100 New Zealand. So I'm using 12k USD capital right there, which shows this is a screenshot from the mobile app of Interactive Brokers, which is really easy and nice to have on your phone. So currently MPW pays $400 in dividends. So if I own the shares, which you can see there, I have 1,100 shares that I get dividends on that quarterly. So we can see that it is a losing position. I got a couple of losing positions here. Ticker symbol MPW, and my average price is $5.74. The current price is $4.34. And I am also investing big in Celsius, so I have 230 shares. The average price is $31.77, and its current price is $25.19. So both of those are losing me money. I've got unrealized for this portfolio at $3,200 US, and this isn't just these positions here. These is like previous losing positions that I might have sold out in. So the current options that I have open is these ones here. So you can see that I've got an MPW, a sell contract at $4.05 call, and that's in February. So I got paid, what, 13 cents per contract. If you times that by 4, so that's $13 plus the fees that you get. So that's good value. That's currently what they call in the money. So if the price does continue, oh no, it's not at the money at the moment. It's in the future, it is, because we're in the future now. But looking at the screenshot here, it was $4.34. So if it remains $4.34, I just collect that money times 4. And then I get to keep my shares. If it is above the $4.50, my shares get called away, and then I sell that at $4.50, and I get to keep the premium still. And then what I do is turn around, and then I then go and sell puts to get my shares back. Obviously, when you do sell them, you're then going to realize the costs between what you paid for them and what you sold them for. But that's for another video. It's very complicated. Over here, moving on to the next one is, so I like to track how I'm going week by week. And this just makes it really simple, whether I'm doing a good job or a bad job. As you can see, it's about just over 50-50. So my target is 90 to 100 New Zealand dollars. And we can see that, yep, I did pretty well here. And then I started losing some trades. You can see I didn't even do any trades then. It went all right, then lost again. So some of these are big wins, some of these are losses. But yeah, I'm just trying to improve my, I guess, my skills in this and see what I go. But it's good to actually record everything to understand, see if I'm actually getting better. So my next one is my InvestNow account. This is actually one of the first platforms I invested in. So for me, funds investing, I wanted to grow this side of my portfolio so that I have lower exposure to dividend stock. As I continue to think the stock market is overvalued, then I don't mind investing into the total market itself and not have to worry about each individual stocks. Because what this does is it just buys the total market for me. I don't have to worry about it. I just set a buy, it buys it periodically, and then effectively I'm going to get the market returns. Although it's not the Tesla gains that you get plus 20, 30, 40, 50% or even higher. This gives me safe place to put my money into working for me and hopefully above inflation, right? So going over this here, you can see I've got 5,000 in there. It's also got a breakdown of what ETFs I have and what managed funds, so that's quite handy to have. You can see that I've been investing in the USF 500, so the S&P 500, but this is smart shares, so I don't have to worry about FIFTAC, which means that I can invest over 50,000 New Zealand dollars. Now, not worrying about it means that it's not that it doesn't pay it, it actually pays it in the fund, so you just don't have to do anything about it. So the current value of USF is $18.87, and we can see I've got 212 shares of those. I've now started investing into the Foundation Series Total World Fund, so that has a price of $1.55. I've got 666 of those, and we can see that here 4,000 for USF, 1,000 there, but I am going to be adding to this position a lot. So going over to how it measures performance, we can see here again it has a, what is it, returns percent with 16.17% since inception. This is not the annualized returns, this is sort of, I don't know what they call it, right? It's just the return since inception, and we can see here that it performed quite well. This portfolio, we got 34% in the last 12 months, so it did very well, and it shows you a breakdown of how much money we actually got from that one there. Now I do have to double check these figures, I don't know where these numbers come from, but what I'm hoping to do is as I invest more into here and I do my own tracking, I can actually see how much it's gained by, because what I'll do is I'll record how many stocks I bought and also the price of them, and it'll give me my average price for it, and then I can work it out from there. But again, I do want to focus on this because I'm getting pretty close to my fifth tax of investing over $50,000 in my own personal name, and I don't want to go over that threshold just yet because we may be doing a big purchase in the future, so I may need that money. I don't really want to go and having to pay this extra tax. If I don't need to, I'm happy to put it into the Total World Fund, chasing moderate or pretty good returns anyway, you know, market returns. That's fine with me. So the next one is my Hatch account. Now I don't invest as much money as I used to in here. Hatch was a pretty big account for me back in the day when we had a big bull market in 2022, and I was heavily invested. Now it just has only one stock in it, which is Tesla stock, and I've only got 8 shares left in this one here. I used to have a lot, but I did sell out on quite a lot of them, and we can see here this is New Zealand dollars, so the price is not going to line up, so this is converted to New Zealand. Current value at the moment is $6,000 with a return. You can see there that my return is 147%. It's currently up. In the portfolio it's 7.7, and we can see it's got a little bit of cash in there as well, but the big one here is my total return for this, and we can see that I have withdrawn some money out of it, so the portfolio return is over 30,000 New Zealand dollars, and it's it's pretty healthy, right? Pretty healthy gains, and my top performer is Tesla at 147. But yeah, I'm not going to put any more money into this. I don't think so. I'm not going to buy any Tesla shares anytime soon. I think it's pretty expensive at around about $400 a share, so I'm wanting to see a bit of pullback from that if I ever get back into it. But if it goes higher, I'm happy to sell. I'm happy to have got my gains. I'm not going to be busy looking at it and going what might happen. You have to have a plan, you have to stick to your plan, and then yeah, there'll be opportunities in the market. There always are. Just wait for it and make sure you have money on the sideline. So the next part is my cryptocurrency and also stake. So here my crypto, I've got $1,000 in it. A lot of it is in BTC, and you see the average price of my BTC is only 45,000, so it's double that now. I probably should have bought more, but anyway, I don't really trust cryptocurrency that much. I've got $320 USDT, and I did actually have some HBAR, and HBAR was just a cryptocurrency I heard about. I bought some and it popped up pretty quickly, and it doubled my money pretty quickly, which was a bit of a shame because I did want to buy more of it, but again, it hit a price target that I'd already set. That was the plan. I sold it. I'll then be buying some more when it comes down, and it's really important that you have a plan and you understand where you're going, because if you're just going to be buying and selling, not understanding, having no plan, you won't know when you're actually going to do something, right? When are you going to action something, when you're not? Have these goals and plans, then you're not going to be able to systematically be able to set yourself a decent goal in the future to make a lot of money and then know when to quit. You're just going to keep on gambling, and eventually you're going to probably get it wrong, and then you're going to lose your money and the market's going to take your money. I'm here to make money, to improve my lifestyle, to help out my family. So therefore, we need a plan to see if I'm actually doing this correctly or if I'm just wasting my time and losing money. Right, so that's enough of that. Anyway, going over to stake, I have only $100. There's not much. I don't put any money into this. Actually, these are these stocks here that I got for free, and that was with the referrals of the links in there. So again, quick shout out to my referrals. Feel free to use them if you want to start investing. They help me out a lot as well. They give me a little bit of a kickback as well as giving you some stocks as well. So please do that if you can, and for all the people that have supported me and used my links before, thank you very much. It's helped out in a major way, and you can see here I'm showing you what I'm doing with it, and hopefully that's enough that you've gone and used my links. Thank you. So this moves me onto my private accounts, which I started in 2024, and this has a total of $25,000 at the moment, and the total simple return that I have for these here is that it's 38%, so it's done very well. So the main reason I don't show these accounts is because I like to buy other random stocks, and if you buy random stocks and you show it on YouTube, you do get a little bit of hate and up for discussion, and that's okay. I don't mind discussing some things about this, but sometimes I just want to try different things, right? And if you put it out there, if people look at these accounts, it's going to put me off, and I'd really just want to be free to buy these things here. I'm okay if I lose this money. I know it's a lot of money, $20,000, whatever. That's fine. I'm happy because I want to understand what happens when you do something. It's $20,000, but remembering that I started with $3,000, I'm not there to throw it away. I'm actually here to try to learn it because I want to gain more money. I understand by doing it. Maybe other times I don't make money, but yeah, it's good to be making money in this here when things do go to plan. This is why I do it, and I don't share it on here because I don't want the hate in the comments. You can do that in my other accounts, but in my private account, it's just nice to be able to do some things, privately. So going on to here, and this Sharesies account here, so this, you can see me that I've sold out in this. I've got 86% cash, and the total return that I got from this is $5,000, which is 47%. So you can work that, you can reverse calculate it if you want to. But anyway, my top performer was Tesla, so that had a great year, and that returned me 125%, effectively doubling my money. So sorry, that there is Hatch, and this is the Sharesies one there. But again, in my Sharesies account, I managed to get 35% returns in that, so that was pretty good, just with a handful of stocks that I was playing in. So yeah, the private account did pretty well, and what I'll be doing with that money, well, I did take some out because I went to a holiday in Australia, but I'll be reinvesting some of that again once I see opportunity. Yeah, but as usual, this is a private account. I'm not going to share what's inside it. I just share portfolio amounts are and its returns. So in summary, that is my $144,000 that I'm sharing here. You can see from the video it was $3,000, so I've done all right. So in that first video, I didn't include my KiwiSaver, which had like $45,000 in there. I've only included that recently, but I think it's still pretty good as I focus on investing. So again, I want to point out that I'm still constantly learning as I try to figure out the correct strategies that work for me and how I can achieve the goals that I want to be achieving in the stock market. Anyways, let me know what you think about the video, my different portfolios, and how I am investing. Let me know what you think about how I'm putting a lot more money into growing my funds as opposed to individual stocks, or in this case, dividend stocks. If you have any questions for me, feel free to write them down below in the comment section. Also, I'm over in Instagram, so feel free to follow me over there if you want to hear some commentary during the week about the stock market, what I'm doing in the markets, or if you just have any questions and you want to write to me. The trading platform I use is Interactive Brokers, Hatch Invest, Stake, and Sharesies for individual companies, and I use InvestNow for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand. Again, I'd really appreciate it if you could hit the like and subscribe button. It's only a second out of your day. And if you click this end video here, it's a really good starter video. If you've been thinking about investing, you want to do something about it now, hit one of my referral codes. And if you got any questions for me, hit me up. But click this video here, give it a watch, and start getting your money to work for you. Anyway, I've said enough. Thank you very much for watching. I'll see you on the next video. Goodbye.